Hanneke, welcome. As CEO of one of the world's leading asset managers, what are you hearing from your clients at the moment about the biggest challenges that they're facing?
So the biggest challenge that they faced was that in 2022, the market went through an enormous downturn. We saw the conditions change in the market. We've had about 14, 15 years of low inflation, low interest rates, and we saw that change to high inflation and an increased rate environment. As a consequence of that, plus also the geopolitical tension we've seen around the world led by the invasion of the Ukraine by Russia, we saw markets really move into a more volatile world. We saw the value of assets decline, and what was really different, which is something we hadn't really seen before, is that both the value of equities declined by about 20% over a certain period of time, as well as the value of bonds because of the increases in rates. So the conventional 60-40 portfolio that many clients depended upon to meet their investment objectives had the worst returns in 40 years. They were down by about 24%. So that diversification benefit that was meant to occur didn't really materialize. So as a consequence, clients have moved into what we call risk-off territory. They've switched more into cash. They've started to come a bit back into fixed income, but they've been very, very cautious with respect to equities and are really rethinking their asset allocations.
So apart from don't panic, what are you advising your clients at the moment?
Actually, very much don't panic, right? You do need to think about the long term. It's hard when markets are more volatile, and it's hard when there is so much change and when the conditions under which you've been running your portfolios have changed so dramatically. So client engagement is clearly key in everything we do, and that has been even more true in 2022 and going into 2023. Now, I do think there are two things happening in 23. One is we think it's likely that rates will stay higher for longer. We also think inflation will stay a bit higher for longer as well. We do believe as a result that fixed income may offer some attractive opportunities for clients because yields are up and the prices have fallen. So while that was not good for portfolios last year, that provides good opportunities from an entry perspective. I think it's going to take some time for clients to really get back into growth equity again. But in the meantime, they can find good value in income equities and stocks that pay dividends is where we still see some good value. So there are some things they can do, but they will have to reallocate their portfolios, and many of them are doing so.
So what are the key trends then that you are focusing on at the minute?
So we're focusing, in our business, we're not immune from those trends. So we've seen good opportunities for our cash business. We see good opportunities for our fixed income business. We also actually see very good opportunities in multi-asset. So a more modern version of what was the old 60-40 portfolio, which you could call a simplified multi-asset portfolio. We're now seeing opportunities for clients to invest in multi-asset portfolios that include perhaps gold or derivatives alongside fixed income and equity securities to create a more outcome-oriented return rather than just focusing on beating benchmarks. So I think there are some very exciting opportunities still to be had to work with our clients to meet their objectives.
Hanneke, thank you so much.